All right, good morning, everyone. Let's kick it off. Okay, yesterday's session in the States was relatively solid, just adding to the gains on the breakout, nothing spectacular, not really stretching its legs, not really taking itself to an overbought condition, but still rising nonetheless, and I think rising um, maybe without the market on board, which is probably part of the important thing. I think still a reasonable amount of capital on the sidelines, and yeah, so to get it to turn around, we may need to see guys really pile in. One of the interesting things that I read out last night was from Bank of America, and they talked about uh, some of the biggest divergences they've ever seen. The market's bullish as a whole, but we saw outflows in U.S. Equities for I think 2 or 3 months in a row now, and of almost, if I'm not mistaken, I think the number was 100 plus billion. And essentially, maybe going to Europe or Asia or wherever, and more preferred markets. But the interesting thing is that the market continues to bounce even with the outflows. So you know I think the spate of M&A, the spate of buybacks and hike divvies and that sort of thing has been able to continue to propel markets upward. We had a couple of things out yesterday. One was that Ascena, the retail group, announced plans to buy in Taylor, $47 a share in cash and stock. You had Carl Icahn going after Apple, asking them to up their repurchase program. Also throwing out that he thinks Apple's worth $240 a share, pretty impressive. And Goldman Sachs lowering its oil, or let's just be a little clear about that. They actually hiked this year's forecast by a couple dollars. I think their estimate was at 50 for light sweet, and they bumped it up to like 52 or 53. But essentially, they're saying that in 2020 we're only going to see oil at $55, which I think is that's saying something very significant right there, is that the oil price is going to go nowhere for that long, and there really is a lot of supply around. You've got a lot of the regions back in the Middle East that are starting to come back online now, and really in what is more or less a waning demand across the globe. Right, this morning, in terms of corporate action, we had Coronation, which is out. That came at 246. Guidance is for maybe a touch better than that, 249. The revenue and divvy per share numbers are both a miss, but that doesn't include the previous guidance numbers, the previous trading statement they had. So I don't know how much of this is priced in. Obviously, it's been under pressure for a while. I don't know if this is a little bit of relief, but I think it's going to be a big part of this is going to be looking at the outlook and see how they're guiding going forward. The PPC as well, which came in at 60 cents per share to 63 cents. Revenue at 4.5 billion, full year at 9.51. So I'm not sure how that compares. Divvy per share 1 cent light. Reunert, we've got at 242. That looks like a miss at 267, and the revenue at 394 for the half year, relative to 8.14 for the full year. Divvy per share at 105 looks like a little bit of a beat from 95 consensus. So we continue to get further into our earnings season. I wouldn't say that there's been anything spectacular in terms of earnings here locally. There obviously have been some that have been beating. Obviously, it's been a little bit more sector specific. Miners have been under pressure. I think industrials have also been a little bit under pressure, but banks and retailers have been relatively solid. All right, getting into the market data today. We've got UK CPI as well as PPI at 10:30. We've got the ZEW surveys in Germany at 11. We've got CPI out of the entire Eurozone at 11 as well. And then we've got local unemployment at 11:30 and U.S. housing starts at 2:30 today. All right, let's get into the maps. The first thing we're going to look at this morning is the dollar ZAR. So we've gone back to this chart 100 million times. You can see plain as day. You don't have to be a certified charting technician to be able to see where the level is here at 1180. it's been the inflection point here, I would say, a dozen or so days, if not more, over the past 5-6 months, and just continues to cement itself as being a monumental level. I think we're going to end up seeing a big breakout out of this formation, and we've broken out of the pound to the upside on the pound, obviously the downside of the Ren. And I think that this thing is most likely going to follow suit in that same direction. If we hadn't gotten so many soft data points out of the U.S. over the last couple weeks, then we probably would have made that move already. All right, the next chart we'll look at here is Bright. So we showed this one yesterday. I just wanted to go back to it. The 95 level, obviously important. This is like a brilliant little cup and handle here, and really exploding to the upside. I think that there's still a hell of a lot of meat left on this bone here. It doesn't mean that we're going to run there in a straight line. We may come back and test 95. But I would say, at worst case scenario, there's a target up here closer to 120. So just keep that in mind. The target's big there. I think they got a lot of things going for it. And it's going to be hard to rein that one in anytime soon without any new news. All right, next one we'll look at is CFR. So CFR got added to Goldman's conviction buy list this morning. You can see here, this is a 30-minute chart. 105, obviously they put a monster floor in over, let's see here, 1, 2, 3, 4. I mean, it's like 6 or 7 trading days. We tested down around 105. We weren't able to drop it. Now we're starting to look like we're going to make a continuation pattern. I saw Julius Baer this morning calling it up in the pre-market 1.8% in Switzerland, which would obviously take us nicely over this 109.20 level. It would probably put us around 110, and that would be a breakout on this chart. The target would be up around 113, so just keep that in mind. All right, next one we'll look at is Anglos. So Anglos has been just a dog relative to the bunch. Every time it looks like it's getting ready to take off, that's when you've just got to hit it. Right here around 199 is definitely, I think, is where I would call the floor, the support level here. We tested 216 3 times on 3 separate days. I call it 4 times on 4 separate days. And so this is a very, very clearly defined range here. If we drop at 199, I mean, I think that we're potentially coming back to get, test at least closer to the lows, maybe around 184, something like that, 183, down around these sorts of levels. So definitely a big level at 199 that needs to hold. If it doesn't, it's going to be under serious pressure. And the last one that I'll look at this morning is SAB Miller. So, since we got that announcement the other day, potential acquisition or whatever, again, from AB InBev and 3G or whatever they call 3M partners, Warren Buffett involved in the whole story. You can see here we've really been making a little narrowing wedge here, maybe a ascending triangle, whatever you want to call it. I think you could actually draw it like this as well. Either way you look at it, I think we got to get above 680. To me, that's still the line in the sand. If we get above 680, I think it's a chip shot straight to 700. So just keep that in mind as a bit of a number. I think if we get north of 680 in breweries, this thing's probably really going to take off. And it's been spending a couple days here consolidating, lulling everyone to sleep. If it gets above 680, you probably want to be on the long side. That's it for today, guys. Good luck out there.